What's up, guys? My name is Austin and you're watching Econometrics with Austin. Like I said in my earlier video, I'm currently away from my computer, so I'm recording this on Friday, March 20th. So some things may have changed between now and Wednesday when this video goes live, but the premise stays the same. Alright guys, so today we're going to be talking about the gold and silver market. The reason I want to talk about this is because, for one, I'm active in the gold and silver market. I have about 20 ounces of silver and about 3.5 ounces of gold. I actually, stupidly, just bought 100 grams of gold right before the price dropped. I got it at this peak, like $1,600 a gram. It was a stupid buy, but I was thinking that the virus would have people scared and most people run to the gold market when they get scared, and thought the price was going to go up. But I never thought in a million years that we would practically shut down the economy. And that's shutting down the economy just threw everything that you know off, pretty much. Anything that you thought you knew or thought was going to happen, throw it out the window, because this is unprecedented. And number two is because you hear a lot of people saying that something is wrong with the precious metals market because of the steep price drop in gold, and especially silver, and palladium has also seen a big price drop. So that's why I'm going to talk about it today. And the short answer to that, there's something wrong, is no. There's nothing wrong with the precious metals market, and I'll explain why that is and why precious metals have had such a steep price drop in the last few weeks. So to begin, let's look at gold and silver's historic prices. So as you can see, in 2008, there was a sharp increase coming up into right before the recession hit, as people started to get weary of the market, get weary of the economy. And this can be attributed to the fact that precious metals are relatively more stable than the stock market, and they have a pretty stable increase in value over time. But once the market tanked in 2008, we see a big dip in gold and silver prices. So let's take a look at silver. Well, first of all, here's the gold in July at $957, and then once we get into the heat of the economy crash, it's dropped $200 to $700. So let's take a look at silver. For that same 2008, peaked around $20. This is the same day, 7/6, $18. December 19th, $9. You can see it lost half its value in just a couple months. And we see this in both the gold and the silver market. And the reason for this is liquidity. When people lose their jobs or companies get into financial stress, they have to liquidate their assets. And the easiest things to liquidate are stocks and precious metals and bonds. And it's a lot harder to sell a home or to sell a car whenever you can sell your stocks, gold, bonds with a simple push of a button. Now, I wasn't around trading in 2008, so it might have been a little harder then. But today, with the internet, everything is so quick. You can get on there and just press buy, press sell. You can do it in less than a minute. You can completely clean out your whole portfolio. And so what we're seeing today is very similar to what we saw in 2008 with 2008. And the big difference is that in 2008, the banks caused the problem. So there was an underlying problem in the market with the bad loans that came from the banks. But in 2020, today, there's nothing wrong with the economy. We have one of the strongest economies we've ever had. The problem that we're having is the coronavirus and the measures that we're having to take to stop the spread. If the coronavirus didn't happen, it's an if-then statement. If this, then that. If it hadn't happened, then our economy would still be on the same upward trajectory that it's been on the past 3 years. But because of the coronavirus, we've taken a huge turn down. And all of the businesses and companies that have had to shut down all across the world, and all the people that have been laid off or furloughed due to those companies temporarily closing their doors, need liquidity. So what do? They sell their stocks. Look at the stock market, down 35%-ish. They sell their bonds. The bond market was absolutely crazy until the Fed stepped in, and the Fed has pumped trillions of dollars now into the bond market to level it out. And then guess what they do? They sell their gold and silver. And the main reason that gold and silver prices have plunged is because we have a big liquidity problem. Everyone needs cash, and few people have it. And when companies and people have no cash coming in, they have to get it from somewhere. And the market is where they get it from. So if you take a look at gold prices after the initial liquidity run in 2008, let's switch back over to gold. They're around $716. And in the next 3 years, the price goes from $716 to $1,873. Within 3 years, you see this huge upward trend as people put their money back into precious metals. And I think that's what we're going to see happen this year and over the next couple of years with gold and silver. And if you want, we can go back and look at silver from the same time period. Within 3 years, silver it exploded and went almost to $50. It didn't stay there very long. But in that same 3-year time period, a little less than 3 years, silver went from $9 to $48 at its peak. And so what I'm thinking is once this virus is contained, the economy is going to go back to normal and people are going to be looking for places to put their money. And when they see gold as cheap as it is, or as cheap as it will be, they'll start buying. And today, there was some really good positive news for the gold market, even though it was, I think it was a little bit up today. The current futures are trading up anyways. They're up $21. Somebody placed a futures call in December for 100,000 ounces of gold at $1,900 an ounce. That cost over $4 million just to make that call. Of course, the total value is $190 million, but it cost them $4 million just to make the call. And, if that doesn't tell you where gold is heading, then I don't know what will. If somebody's already making calls out at $1,900, that means they expect it to be that high. And if you're playing around with enough money to be able to purchase that much, like 100,000 ounces of gold in one go, you're usually pretty smart. Or you got somebody working for you that knows something or that's pretty smart. So, and another reason that gold prices have fallen is due to decreased industrial demand. Gold is an excellent conductor of electricity and is used in many industrial processes and technology goods like computers, smartphones, calculators. Anything technology related more than likely has gold in it. Now it's I wouldn't say trace amounts. It's not quite measurable. Maybe a gram, but normally less than a gram. Depending on your hardware. Like a phone doesn't have a gram in it. A big desktop computer that's maxed out with all the latest hardware, it might have a gram or two in it. So as aggregate demand across the world has decreased, so has the demand for gold. So the aggregate demand for smartphones, computers, the industrial products has all decreased, and a lot of the factories, especially the ones in China, have all shut down completely. They might be reopening now. But all of this reduction in demand is what has aided the drop in gold prices along with the liquidity issue. So to sum it all up, gold is cheap right now and will probably go cheaper due to the liquidity issue in the market. Another month or two, prices will probably keep declining. But once we get this virus contained, it might be longer. The president's saying July or August to get it contained. We'll see how the market pans out, how long it takes the market to calm down. I think that, once we get it contained, the value of gold will skyrocket like it did after the Great Recession in 2008. And, it wouldn't surprise me. We see this, if we zoom back into the 1 month, and we see, here's where I bought gold at $16.75. We see this huge sell-off of gold, and it comes back up a little bit, then it sells off, come back up, and hopefully, more than likely, I think gold, it'll settle out maybe $1,400. Now that's not, I don't want it to be that way because I'm losing money, a lot of it. But $1,400, probably a good settle point. But you know, if it does what it did in 2008 when people are dumping money into gold, take 1,400 times it 2.5, 3,500. I was somewhat close. So $3,500 for an ounce of gold. That's amazing. That's an absolutely crazy price, and it wouldn't surprise me if we see it. 3,500 an ounce wouldn't surprise me if we see it, and I'm all for it because I'm losing money on this gold that I bought at these crazy expensive prices. And with silver, you know, it shot up from $9 all the way up to 48. That's just say 5 times your money. So gold, if silver's at 12, I don't think silver will fall too much more. Maybe it might get back down to these numbers, $9 maybe. That wouldn't be too far off. Maybe $9 silver. And you know, if it got back up to $50, I mean, it wouldn't surprise me. But I don't know if I would be willing to say it would go that high. I'll say maybe 30. Let's go with 30. $30 silver. That's what I'll go with. But anyways, guys, this is a short video. Like I said, I'm pre-recording it. So who knows? Maybe on Wednesday it'll have already dipped, or maybe it'll be shooting back up. Who knows what's going to happen between now and then? There's so much time in between. I'll keep you updated. Maybe update some comments under the video once it gets posted. But anyways, thanks for watching the video. Be sure to like and subscribe for new videos coming out every weekday. Thanks again, and I'll see you in the next video.